pretty hard to. Yeah, Discord is not perfect for those, but it's so convenient to have everything in the community and can link those events. So yeah, that's nice to have that option as well. But anyway, so again, let's start the recording again. So good morning, everyone. Um, and let me repeat because there was some with no audio. Uh, that will not be an easy day. I know those days sucks, but those are part of the game. So you have two options, right? So every time the market is making a new high and there's a reversal, you get out of the market, go cash, go short. Um, and then on days like today, you can say, hey, I predicted this. I'm a genius. Or the other way is to just ride the trend, accept that those days are part of the game, and yeah, we'll see and we assess with the information that we have today. But usually, the second trader that just ride the trend is way better at riding his winners, and overall performance is way higher, despite the fact that we take those type of days in between. So you have to define what type of traders you are. Um, are you looking for multi-week and months trades and moves? In that case, days like today are business as usual and you have to accept them. Or you are a very short-term trader and every time the market is extended and overbought, then you sell it all and wait for the market to set up again. But then you might trade for 3, 4, 5 days, a week. So you have to really define what type of trader you are. I cannot answer that question for you. That's really a personal question, and you have to define your own goals, your emotions, your discipline, how you want that trading lifestyle to be. But that's your question to answer. All right, so let's review the market. Quickly, just taking the price chart just to begin with. Um, so yeah, I was still playing this as a pullback into the 21 DMA structure. So that was kind of a bit of divergence between the weighted and unweighted indices. So we had that base area retest, we had that 21 DMA structure and even 20 EMA backtest yesterday. We had that potential higher low as well. We closed strong. We closed above the structure after failing to confirm the daily reversal. So for me, last night, at the end of the day, the setup was still there. So that's when I say that at some point you don't have to anticipate and try to read the future. Uh, there was maybe credit spreads that were telling the story, and they are pretty reliable, right? And we'll have to see where this goes. But that spike above the 21 DME structure was kind of a red flag yesterday. But at the same time, we had conflicting signal with the VIX not being able to reclaim the 21 DME structure. Nice rejection, close at the lows, but obviously that gapped up above structure today. So I give more weight to credit spreads, but again, that's not a sell signal for me. That was only meaning to be a signal not to go on margin. Uh, if I would have a position like Queen, where it's lower in the structure and I didn't have any cushion, then I would have closed that. But I had Tesla, SoFi, with already great cushion, and I had AVGO, which was higher in the structure. So I was good with the new exposure that I had, even seeing that credit spreads, which you never know where it will go. So yeah, QQQE setup was there at the end of the day. The only thing probably that is coming back this morning, and I don't even know if there's a news or something. Uh, for me, I just take the price as it is, and will assess information as we go today. So the only thing, so QQQE was right into structure, right into that setup area. But QQQ was still extended. We're still 2 times ATR from the 21 EMA, still 4.3 times ATR from the 10-week moving average. So that's probably what is snapping back into our face this morning, along maybe some news, I don't know, but the Qs were still extended, and that's probably what just snapping back down this morning. So we're right into the gap on QQQ. We're approaching the 21 DMA structure. So we'll need to see where and how the buyers are stepping in. Do we have some type of 21 DMA structure pullback, higher low in that area? We would be close to that. Uh, a bit like QQQE did. That's a delayed kind of reaction. Maybe we need to put the same type of 3 to 4 day pullback into the 21 DMA structure, but on the weighted indices as well. So that's what I see about price. Let's see if QQQE can hold the structure today. Let's see where QQQ is trying to find support. We're still above a rising daily structure, so the trend is still up. And that's why, despite being defensive, and I will not open new exposure today, but at the same time, I will not panic sell everything at the open, and I will wait to see at the end of the day, unless there's a catastrophic sell-off. But I will wait at the end of the day, see if my positions are holding their daily structures, and assess from there. Let's switch to TradersLab. Yeah, so like I said, QQQE right into daily structure, but probably a big gap down below. So we'll need to see if buyers are stepping in. We're back into structure by the end of the day, or we gap down and crap. That wouldn't be very good. So McClellan summation still in a downtrend, pretty low selling, I would say. I thought that would be just kind of a small sideway pullback above the rising 10 DMA, and we could resume that uptrend. So let's see if that can still happen today, or we just roll over and undercut the 10 DMA, and then in that case, I will be more patient, especially if price start to trade below the 21 DMA structure. McClellan continue to be in that weakness phase and breadth contracting below a 10 DMA. Then you will see me being more defensive and more patient. We still had that breadth extension short-term oversold hookup yesterday, so that's why I was seeing still constructive action. But yeah, looks like it will fail. We'll probably retest those oversold levels, and let's see how the market reacts. So yeah, still same thing on the normalized. I will be watching if the McClellan oscillator can get oversold. in the one standard deviation or below, that would be a nice bounce spot as well. Uh, Knowing that the Qs, weighted Qs, are coming into their structure as well. So if we have the Qs coming into the 21 DMA structure and we have MCO getting oversold, then that will be a pretty interesting setup to see buyers step in. Bread extensions, again, we had that oversold hookup. So I was seeing that as being pretty constructive, but that happens. It failed, and we'll have to assess if it set up again today. All right, so let's review now the portfolio. And that will be kind of an information day, in the sense that that gap down into structure, into potential support, will give us a lot of information about this market. Is buyer stepping in? Is that gap down bought aggressively? Or we will see a gap and fade and selling all day. That would be problematic, but we want to see that daily structure hold. All right, so let's review the positions. So AVGO still not, so still in the upper range of the daily structure. So I want to be patient with this one. I bought off that range structure. I was aware that it was probably not ready. I was expecting some maybe further weakness to retest the 21 EMA, and that's pretty much what we have this morning. So I want to see how it hacks. That's definitely in the focus list. So yeah, good weakness, a market potentially in support, potentially another oversold reading in the market. So if you don't have exposure, that would be the kind of day where I watch those names, those leaders into support, and try some stuff if we see buyers come in. So if there's no buyers in sight and sellers are in control all day, then obviously this is a clear sit out day. But if you start to see constructive action during the day, bread coming, some reversal confirming as well, then that's the type of weakness of red day that usually are the best to try to position. Tesla was a great setup yesterday, not so much today. But we're still above the daily structure. We're still above that range structure as well. I have some cushion. Well, nah, not anymore. I will be in the red for that position. But yeah, I want to see how this structure holds. My stop loss again is below at the daily structure, so I do have a lot of room to my stop. SoFi, so same thing. I have a good entry on this. I want to be patient. My stop loss is at the 21 DMA structure. It might need to make another higher low, and that would be constructive, and that right side would build constructively. So patience. We're gapping down right into structure. So let's see how the buyers are stepping in. All right, so for the rest, the cores, trends are well in place. 21 DMA structure, pullback, or just normal price action. So I do have in the majority of those names a lot of room to the daily structure. So I'm still seeing this as digestion, as constructive action, and they might even give add-on opportunities. I will not push on margin. I'm already fully exposed. But if I would not, or if I close a new position and today or the next few days, then we set up again, then I would look to add to my core positions. So CrowdStrike still well in that range, no problem. CG, that might be a position that is in danger for me at the end of the day, simply because earnings are later this week. And if we start to trade weak in the bottom of the 21 DMA structure, then likely no time for cushion into earnings. So I'm on my last third on my core, but I would like to see buyers stepping, especially as we gap down below that structure. So that's a name, that's a core that is in danger at the end of the day. D-Dog, pretty much the same thing. We have earnings on Thursday, so that will be in danger at the end of the day if I have to manage risk. Simply because earnings are very, very close, and I was kind of expecting, not expecting, but wanted to see more upside in order to keep into earnings. So if we gap down into structure and we need more time to build the right side, then I just won't have the cushion to test into earnings. Dell, another one in the focus list. So we had kind of a double top-ish rejection of the recent swing high. And this is setting up. This is setting up in the 21 DMA structure. Look for how we will hack. Do we see buyer step in? Do we make some type of oops reversal? And if we do that type of oops reversal, that would be a good add or a new position candidate. Snow, a lot of room. It can pull back. AMD earnings tonight. Keep that in mind, guys. So if you don't have the cushion or if you didn't trim that position, make sure to adjust your risk. So yeah, earnings tonight, but a lot of room to the 21 DMA structure, and that I will hold into earnings. Micron, still same thing, a lot of room above the daily structure. VRT, so that's another name that if you are not in, that will be bumped up into the focus list because we're gapping right into the daily structure. So if we see some kind of oops reversal with a tap of the 21 EMA, a reclaim of that range structure, that area, then that's a pretty nice add-on or new position candidate. And CRDO failing the breakout. Oh, surprise, breakouts are faded. So yeah, look for a retest of structure. That would be a pretty good add-on opportunity if this happens in the next few days. And yeah, look if we can hold that retest. But that's a pretty classic breakout, fail breakout and reset pattern. So look for that pullback. Look how we hacked on the right side, and if we can set up again for the breakout. All right. So did I have anything else in the focus list? AVGO, Dell, yeah. So SoFi as well. Same thing. So if we see buyers stepping in that range and support area on a hoops reversal, that's a pretty nice setup to engage. Earnings are out of the way. So yeah, AVGO, SoFi, Dell, and VRT in the focus list. But it's very market dependent. So it's important to get ready, guys, to have your names to execute, to have the names that you want to cut if we have to manage risk. But it's not about and not about anticipating or predicting. That's about being ready, knowing what we want to see, especially in the market, right? So we want to see stabilization in support. We want to see buyers stepping in, and we want to see breadth coming. So if we see those and there is good setups, uh, that's probably better to buy here than to buy very extended from the short-term and long-term moving averages. And that's what the market rewards. And that's why I was able to weather that chop and still have a good month in October, because I was buying low in structure and I was patient with the position as they were chopping around, but in that uptrend, just grinding higher and reducing the trade activity, reducing um, the trading overall really helped. So that's the same thing we see right now. So that being said, keep in mind everything can happen, and I said that at the start of the session. If the buyers are not able to hold that support, and sellers are stronger, and we start to see credit spreads continue to spike, we have the VIX staying above the daily structure, we have Bitcoin breaking down from that big monthly base, we have names in your portfolio that are not able to hold their daily structures. We have McClellan summation picking up speed to the downside and undercutting the 10 DMA. If we have, I don't know, name it, the QQQE starting to live below a declining 21 DMA structure, then obviously don't buy every dip. That will be a time to tell yourself, okay, the quick and short pullback into a rising 21 DMA structure is kind of not acting like I was expecting for my hedge. And now I'm shifting my mindset to, okay, that might be a longer pullback. So let's close new risk. Let's close my core positions that are not able to hold their daily structure and wait patiently for the market to set up later. Is it a correction? Is it a bear market? No, you're going 3 steps ahead. Then if the short-term pullback is not working, let's wait and see if the intermediate term and a bit longer pullback is acting like it should. If not, then we'll call this a correction and act accordingly. So always go by steps. Play the first scenario. If that doesn't pan out, and this is not normal action for the scenario that you're playing and expecting, then you shift to the next. You're not trying to play the bear market when QQQ is still above a rising daily structure and moving averages are still aligned. Uh, so yeah, very important distinction to make. So questions, guys. Let's get ahead. So how much plan do you need to see today in order to start raising cash? That's all about my position, guys. Uh, Even if QQQE closed below the daily structure, I will still make my decision based on my position. So if AVGO uh, is undercutting the daily structure, if Tesla is not able to hold that daily structure, and if SoFi is not able to hold that daily structure, same thing for the position, and we reviewed all of them. So Dell might be at risk as well at the end of the day. VRT might be at risk as well, uh, if not setting up. So I have already defined my new exposure along my stops. I identified my position, my core positions that are at risk if they can't hold their 21 DME structure. So my game plan is made. At the end of the day, if those are not able to show decisive action and support in their daily structure, then they will be out, and the market will kick myself out. That's the process. Uh, and yes, sometimes I do mistakes and I close position too soon. I'm still prone to panic sell from time to time. I'm not perfect, and don't expect yourself to be perfect along the way, even after many years of trading. Uh, but you can get better in your process, and that's what I do. I'm getting better, and I'm at a good level. Uh, so game plan is made. Again, new position, AVGO, Tesla, SoFi. If they don't hold their 21 DMA structure, this is out. If CG, DDOG, Dell, and VRT are not able to hold their daily structures, that's it, they're out. And market will kick myself out like that as we gain information. And other thing, um, don't don't base your actions on your P&L. That's not a day to be fixated on your P&L. That will bring emotions. You will trade off those emotions, and you will probably do things that are outside your system, not logical things. Um, and yeah, just focus on your process. And that's why we calculate that new exposure risk. That's why we calculate our open EAT. So what's the point to calculate it if you don't accept it and you don't not trust it, but um, kind of take action before this is triggered, right? Okay, so wanted to know your thought process and what do you look at to draw support resistance, horizontal line. Oh yeah, yeah, we have time. So let's do a bit of education about structures. And I talked about daily reversals a lot in the last sessions. And yeah, basically that's when you see a short-term pullback. You have a succession of lower highs in a short-term downtrend structure, right? And the daily reversal is always the last lower high. And when we reclaim that lower high, that's the reversal pivot that I call. So that's an important structure for me. Uh, a bit micro structure on the shorter time frame, but still very important for entries. Then that's all about kind of zooming out and trying to find on the left side what are the important levels, and important levels are reversal levels. So take when you have a leg up, an uptrend, and it start to kind of digest and fade, you take that high and just draw your line. And then the more it is respected, the more weight it has. So rejected here, rejected again. So we have a pullback, a retest of that level, and there's also another rejection. So that's an important level. You know that now. You also have a higher low. So what it tells you is that the first time that we hit that resistance, we pull back into structure to that level. And the next time we hit that level, we have another rejection, but sellers are much more weaker, or buyers are stronger, we just don't know. And we form a higher low, which is very constructive for the reason I just explained. And then you have a breakout of that level. And you just go into your chart, you have that other uptrend. Where does it stall? You draw your line, and you have your structure. You have a first rejection. The other time that we tried to reclaim that level, we reject as well. A third time, and then fourth time we reclaim. and you have that flip as well. So resistance becomes support on the retest. So you have two retests on the right side here. So first time, so we were rejected 3 times. Fourth time we break out. And what happens is we hold that structure on the retest. So it gives you good information. You now know that buyers are stepping in above and we don't reject that structure area again. And you just go on. You have another leg up. There's a reversal here. So same thing. It does not have to be perfect, guys. Don't think this has to be perfect. So you have a reversal. That's an area. That's an elastic, an area of resistance and support. And sometimes they work. So you have breakout. You have retest, but a bit higher. Higher low structure, always important. And sometimes you come back in and that's a bit choppy, but we still hold that level and it still gives very good information. And sometimes we just fail and go back in. But that's how you go back into a chart. Look for leg higher where the initial reversal happens and draw your lines. And look for lower highs. Look for the action around. Do we reject? Do we form higher lows? Do we break out? Do we back test about after a breakout? All those signs and information around structure will give you very good information. All right, do you also wait usually end of day for decision if price gaps clearly below your entry and stop? Yeah, in that case, I might manage risk if we are deep red and red flags start to pile up. Um, yeah, if we gap below my stop, that's always a judgment call. But on those type of days where you just don't know if the market will find support, I might wait a couple minutes and then cut some stuff just to manage my risk. But in my case, that's not the case today. But I understand maybe the question is more for you. How do you manage not to focus on your P&L when it is on top of the screen? And then you just don't open interactive broker, man. Close it. That's a great day to just have trading view open. Uh, don't connect to your broker. And yeah, if you need to do trades, you open it, you take action. But P&L will fuck your mind. Yeah, put a tape. Go take some duct tape and put that over. Post it. Yeah, that's correct. That's good point though. I was mainly using interactive broker to trade options since it cannot be done right. Yeah, I was doing that as well. Um, but yeah, so if you have trades to do, then open it. If you don't have trades to do and you want to be patient, a bit like I plan to do today, then there's just no point to open it. Why would you open it if you don't plan to make any trades? That's only for looking at your P&L. So yeah, just keep that in mind, guys. Accept that today will not be a P&L day, a good EC day, but we had plenty of great P&L day in the last few weeks and months. That run from April's low was quite impressive and incredible. So even if we take a 3, 4, 5% P&L down day, uh, that's just part of a normal uptrend in our equity curve as well. So PLTR, would you consider it to buy if it enters 21 EMA structure? I didn't look at it, to be honest. Um, I'm not a fan to execute those large gap down, to be honest. Um, all right, so let's take some example. So let's say that you have, what did I execute? So let's take those examples. So those were not gap downs, but pretty big range. So I prefer to wait kind of the stabilization and playing kind of the daily reversal after an inside day, or some constructive action like right here. So here's your daily reversal of an inside day, didn't trigger. So you look for another one down here. You have a shakeout, another inside day, and you have your daily reversal pivot. You are building higher lows. So that right here is much more constructive and gives you much more information as what the stocks is trying to do, what buyers and sellers are trying to do, instead of just buying a huge gap down, trying to catch the low into a structure. So yeah, not my type of setup at all. I really want to see what it does before. All right. The chag. So after spending time in here, I really realized I was chasing a lot more. What do you mean chasing? Buying extended or chasing the market? I'm interested. Chasing trades. All right. Yeah, that's at the end of the day you have yeah, okay, buying that gap down. That's what you mean. Yeah. And that will come from experience. Uh, and you have to take those losses. That's bad to say, but you have to take those losses to realize that it hurts, and it pays to wait for what you want to see and waiting for that plan and your rules to play out. uh, and yeah, that will just reinforce the plan. Yeah, exactly. All right, so Alex, do you trade via TradingView? Yeah, I try to do most of the time when I'm on the road or doing other things I can do on my phone, but mainly from TradingView. Yeah, I don't like TWS. That's an old platform, and I don't like how it's not easy to put trades. Would you consider spot? Ew. Yeah, what's the setup in spot? Everything that I see is a downtrend below a declining 21 DMA structure. There's nothing to do here. Wait for the reclaim and then look for the backtest. Those are the spots that you want to engage. Sometimes it does not work, like the one that I highlighted. But if you set up yourself for those type of entries, that's where the good win rates and the good trades are. And trying to buy the lows here is just trying to find the low and trying to have the best price, the best price. But there's absolutely no setup. You're fighting the trend, uh, and you're not stacking the odds for you. So Suhail, sorry if I don't say that right. Can you please explain McLennan summation and how do I use it? So make sure to look at my Git book. There's a big part into it about how do I interpret that and how do I trade that. So you will have more information, obviously. Uh, but just quickly, so McClellan summation is basically an indicator constructed with advances and declines. So the market moves in waves. It expands and it contracts. That's how the market moves. And the McClellan summation is just a good indicator that I found over the years that gives you kind of the win. So, do you trade with the win at your face or in your back? And that's what essentially, in easy terms, the McClellan summation is telling you. So, when you are in extremes, you know that the market is stretched, it's overbought. Um, Brett expanded for a good time. Now it might need to just cool off, to contract, to just digest the move that it had. And on the flip side, when we contract for a long time, after a longer pullback, after a correction, and we have those oversold kind of conditions, then you know that the market is stretched to the downside, and we will probably see another period of breadth expansion, and those are the easy money market. So since September, uh, we had an oversold condition, so I was pretty happy to see and playing kind of the potential uptrend. Uh, but this is definitely kind of a choppier market and harder to gain traction. So usually when we get that oversold, we have pretty strong breadth up on the right side. And that creates kind of those easy money market where we have big rallies, a bit like in April. But that's not what we see right now, and that's a bit why I will not argue with price. And if I'm starting to get stepped out of my position, I will not dig myself into a hole. Just recognizing that uh, this is not a clean uptrend with breadth expanding, and that's something to keep in mind. And so that's the summation, and you also have the oscillator, which is a lower level. So the summation is the summation of that oscillator, and it's a short-term oscillator to tell you if the market is oversold or overbought. It's not a sell signal per se, but it just tells you that the market really run hard for a short term and might need time to just settle down and contract a bit. STX. Yeah, that's a nice chart. Leader name, rejection of the recent swing high. Reminds me a bit of Dell. Um, so yeah, it's still in an uptrend. You have that failed breakout, and we're still kind of building higher lows. So yeah, look for a setup in that area. Maybe it's not ready. Maybe it needs to undercut and retest those recent highs here. That would be a very good spot to initiate. But yeah, that's a name with earnings behind as well. So right now it's a bit too high for me from the 21 EMA, but with that gap down, and if we continue lower, that will probably in my pullback scan anyway. Good pronunciation. Yeah, I still struggle with my English. You might recognize some French accent, but yeah, I'm getting better every day, just like in trading. Uh, just just practicing every day helps my English. Merci, mon ami. All right, so Alex is the goal. No, I'm not. I I hope you knew by then that Alex is a pretty humble guy. I don't like to bump the chest and be that guy with the big ego. Uh, and I like process. I like keeping things real. I don't like pumping things and all that. I'm not in this game for that. Um, and like I said in the onboarding, I'm a trader first. That's what I like to do. Um, and that community is just a place where we can hang together. That's a pretty lonely game and work. I'm all alone in my basement, so I'm just happy to talk with everybody, to share some stuff, share knowledge, and help new traders, and that's what I like to do. Um, I'm not in this kind of mentoring to be rich, to scam people. That's not who I am. Would you be cautious with Tesla, with Musk paid? Oh yeah, that's there's a news on Tesla, right? But yeah, let's see how it hacks first today. Let's reassess that at the end of the day. Uh, but again, price first, right? Uh, and I so freaking like Tesla larger chart uh, that I will just follow price, to be honest. We have that massive multi-year breakout. Uh, I really like that, and I will try to focus on that the most that I can. But it has to not give the daily structure today, right? Alex, your mentality is extremely advantageous to your trading success. Yeah, I think so. Being pragmatic and a straight shooter helps provide an objective look at price action and trade opportunity. Thanks for everything. Yeah, pleasure. Thanks for the good feedback. And I think that's how you can be successful in trading. Uh, you see a lot of folks on X with great market calls, and they always talk about their winning trades and all that. Uh, and they like to tell the world that they nailed that trade and they bought the low and they sold the high and etc. etc. But that's actually a mindset that really kills you in real trading worlds. Uh, and if you didn't read that book yet, Trading in the Zone, that's really a great resource to have that probability mindset, thinking in odds. And that's why I tried to explain a bit with the different kind of tranches of scenario where when you're in an uptrend, the first scenario, the first potential scenario with where the odds are the highest is always the short term in the first scenario, the short term pullback. If it fails, then the odds shift to the larger pullback. If it fails, then the odds shift to the next step, which is the correction. If it fails, then you are in a bear market. So just trying to go from we're in an uptrend to we're in a bear market uh, will not make you a good trader. That's good for Hicks. That's good for engagement. That's good for uh, grabbing attention and subscribers, but not being a good trader in the market for the long run. Yeah, so Black Diamond, exactly. I made that big shift earlier this year. I removed everything that I didn't use, scaled down my trading to only a handful of names, only focusing on structure, on the 21 DMA structure, on how it trades around, buying pullbacks, and trusting the trend. I used to panic sell on those type of days like today. Uh, I learned that over time, when I panic sold them the next day or the next few days after that, the trend resumed higher, and I was there trying to chase back my names. Uh, and sometimes you do the right things, selling, and the market just continue lower, and you tell yourself, and you look like a hero to kind of anticipated everything and selling before everyone. Uh, but over time, you miss more opportunities that you are able to protect when you are in an uptrend. That's very important. So, new member, good morning and welcome in the community, Texas Ranger. So, when you say Tesla has to hold structure today, does that mean it can't hit the stop or it falls further? Yeah, I. So, if you didn't read my entire Git book yet, I suggest you start there. There's everything about my system, how I train, where I take my loss, why do I wait, etc., etc. So, uh, usually what I do is to trail that 21 DMA structure, right? That gray band on my charts. And unless there's a big kind of broad sell-off and I have to manage risk intraday, I tend to wait at the end of the day to take my decisions. And if we close below that 21 DMA structure, then that's my stop loss. So those reds, those first reds bars, right? So sometimes we you take big hits. That was the big news about Elon uh, into politics, right? I took a big hit on that, but that's part of the game. So yeah, I closed my position below the 21 DMA structure. Thinking in bets. Yeah, I started that. I have to finish that book. Looks like a good resource. Thanks for that PT button. Yeah, that's a new thing in Discord, and uh, there's kind of that badge where it shows up everywhere in Discord and in the other Discords as well. So I think that's a cool thing, but if you don't like it, you can remove. Uh, all right, so 9:27. That was a good talk. That was a good session. It was a bit long, but there was some good rants. So, okay, guys, enjoy your day. Uh, keep risk first. Think risk first. Sorry. Uh, be patient. Let's wait and see how the buyers are stepping in, what kind of fight we get today, and we'll take a decision at the end of the day. As usual, I will update in the Alex journal to give you some hints along the day, what I see, etc., etc. But that will probably be some kind of panda day for me, not doing so much. All right, so have a good day, everyone. Take care. Bye bye.